Hello, trading has closed on November 4th, 2015. I'm Jeff Tennant. Yesterday I had a MEJT target of 2099.73. I said that it was an optional target, meaning it almost always prints but did not have to. The target actually did print and there was good support right at that price, so that one worked out. During today's trade, we had a few signals that said ultimately higher prices would print. The target was hit early on here, and the target was hit immediately here. MEJT says this drop is a false move and gives us a target of returning to 2106.31. We got to 2106.27. That's close enough to make it an optional target. It almost always prints, but it no longer has to. The system also said this rally is false and gives us a target of 2097.52, and that's going to have to be the call for tomorrow. Well, we dropped all day long and we couldn't close under the middle of the day low, and unless we gap under this low or at least trade under it promptly after the open, it usually leads to higher prices. When you have both higher and lower prices from the MEJT system, very often you get a day which is a whipsaw, and that is certainly possible. But with a required lower target and some other targets I want to see print, I'd be a little bit suspicious if we didn't have the gap under the low. Don't forget we're in a strong bull phase here. When you have lower targets like this and you try to pick tops, it can be pretty risky if you make a mistake. So we'll keep these numbers in mind, but if we don't have a gap under that low, we have to keep our finger on the trigger. There are a number of reasons to look for a top at yesterday's high. We had the straight line break that we discussed. There's also a tendency for a high to, or a low to have a Fibonacci relationship to a previous consolidation. If you call this a cup and this a handle, and you use the 61.8 Fibonacci ratio, you'll see we come pretty close to that high. I wasn't calling this a triangle here based on its internal structure. But even though it really isn't a triangle to me, the highs and the lows of the consolidation can help to justify a low or using this one that can justify the recent high. The main thought is that we're having this FOMC whipsaw. We've dropped, we've gone up, and we now should drop into the 2050s. But if we gap up over this high, or at least take out this high promptly, I think the whole theory falls apart. So I really would like us to start down promptly if that's going to happen. So for tomorrow, we have a target of 2097.52. I'd be suspicious if we don't have a gap under the low. We have an optional target which is higher. If it prints, there could be resistance at that price, but I'd be happier if it didn't print at all. Obviously, as always, tomorrow's open is going to clarify the situation, and a strong gap in one direction or the other could make us rethink things. Right now I'm looking for a gap down and some lower prices as the most likely scenario, and is plan B, a day which just whipsaws back and forth, followed by a bigger move on Friday. And that is today's call.